Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Wednesday, September the 12th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill into our trade levels, our targets, and our hypotheses. Now, our hypotheses are our trade plans. We do not claim to know what the market's going to do. We have to wait, just like everybody else, to have the market open, see who takes control, and then execute the plan that best suits the market. And yesterday was a perfect example of that, where we shifted from hypo 2 into hypo 4, which was our trend scenario. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for educational purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So taking a look at yesterday. Yesterday we had a bit of breakdown going into the RTH session from the Globex. We had OTF participation to the downside, and we are basically looking for a gap down and then responsive buying to balance out the inventory, and then a rotation lower towards the new all-time or month low, and possibly down into that prior microcomposite VPOC at 58.50. That did not happen. Hypo 2 was a failure to make a new low and then to rotate up into the 80 area and basically go sideways in yesterday's range. So that's basically what it looked like. Hypo 3 was a breakdown day, which clearly didn't happen. Hypo 4 was the failure to take out or put a new low in for the month. Initiative, responsive buyers take control early, rotating up into the 80 and then getting continuation up into that 91 area, going sideways and then closing between 85 and 88. And that's essentially what we got. Nothing is perfect in terms of range, but you can see how well that these levels work. And we came up into this level, went sideways, and then we just chopped around between fighting the range high and that trade area that we had at the 92.50. Putting in a very weak high, we have a very weak high at 93. We have a P-shaped profile, which is basically short covering, and we've have a very thin area. We've got a couple singles. We have a TPO single at 28.84 and 28.8175 in the thin part of this profile. So hypo 4 is what ended up playing out yesterday. Taking a look at the overnight inventory. What did we do overnight? We opened auction in the upper distribution from the P-shaped profile. Failed to break out of the 93, rotated back down, tested into the LVN, this thin area right here, found buyers, rotated, grinding our way up and getting up into the 95 area before failing and then rotating all the way back down and coming back towards yesterday's balance or most accepted price at the 89, and basically been chopping in that distribution with a little bit of a push down. The overnight or the news today, we did have core PPI and PPI. It came out worse than expected, minus 0.1 versus expected 0.2. Capacity utilization rate came out less than expected, 85.5 versus 86.9. So we really didn't have, fantastic news. We do have Bullard speaking in 40 minutes, and then we have crude and all its associated products at 10:30. And then at noon, we've got the WSADE report, and then we've got Brainerd speaking at 12:45, 10-year note at 1 o'clock, Beige Book at 2 o'clock. So we do have some news, but really it's, the big news that we have to watch out for is China tariffs, which are supposedly supposed to be going into effect, the NAFTA deal, and any news on Trump or China or North Korea. It's really headline news that has been moving this market. We do have a current zipper measured move right now. Here's the impulse wave. There's the zipper. We're in the continuation wave, and we're looking for a push down into the zipper measured move at 85 1/4. As we are moving into the RT session. Now this remains valid because it was completed, the zipper was completed inside of Globex, so it is valid carried over into the next session. So we have a Globex zipper measured move to 85 1/4. We've got the TPO single print at 84 and 81.75, and we get into a distribution zone down here. I'm marking the key line in the sand below at 76.50. Below that, I think we challenge the week open. The week open and the daily ATR are sitting on top of each other right now at 73.75. The 20-period full session average true range is running at 21.59. So we have range capabilities based on the current full session average true range up into the 29.07 area, 07.75, or down to the week open at 28.73.75. Remember that our month low is down here at 65. Our week low is at 67 1/4. So if we break below this key line in the sand at 76.50, it could release a liquidation down into putting a new week low and a new month low. And again, I'd be targeting this 58.50, 58 area. My key line in the sand above is at yesterday's week high at 93. If we get above 93, we've got that naked VPOC and the overnight high at 95 1/4 or 95.50. And then the balance back up here at the 97. If you look at the structure of the market right now, our microcomposite that runs from the breakout of the last microcomposite balance is up at the 97 1/4, 97.50 area. We're creating a 5-day balance down here that has a microcomposite VPOC at 79 1/4, and the value area is down here at the 70. Now, there's an argument you can use the 69.50, 70 area as your key line in the sand, but I'm using the 70. I can't talk today. I'm using the 76.50 because of the fact that if we get below this VPOC here at 79 and break below the range from the prior microcomposite, it brings that month low and week low into play, and at 58.50. So bigger levels. If we can get above yesterday's range, a push up into balance is anticipated with a move up to test the 2900. There's a lot of repair work to do up here. We've got 4 or 5 naked VPOCs up there. So that, really defines the range, 93 to 76.50 area for balance right now. And above it, push up into 2900. Below it, a push down into the 58.25. So in terms of hypotheses, our overnight high right now is at 95.25. Our overnight low, sorry, I didn't put it in, 86. Now this could extend lower, 86.25, because we are trading, only about a point or 5 ticks off of that. So we could extend that low. But as it is, we're going to be opening up either just below this upper distribution or inside of this upper distribution. I'm anticipating that we're likely going to open down here in this lower distribution, but hard to say right now because I don't know what the market's going to do. So in terms of hypotheses, we have a bullish engulfing day. Notice that we completely engulfed. In fact, not only did we have a bullish engulfing day, we almost had a bullish engulfing of the last couple days. But the one-time framing down has been violated. We have a bullish engulfing. We have an overall upward trend on the larger time frame. I skipped that this morning. I'm just trying to shorten these sessions down a little bit. It's still a practice that I've already done myself. It's a practice that I consider that everybody should do for themselves, taking a look from the macro, starting with the monthly, weekly, daily, and then into the intraday. The trend is basically still up. So hypo 1, again, because of the size and the repair of the low here. And if you look at it, and I'm just going to take it to a market profile for a minute, you can see that this is what you would call an excess low. And this is telling me that this is a fairly strong low being put in. But we do have some repair work from the 87 area down into the 76 area. So my main hypothesis is this repair first and then the continuation up. So in terms of hypo, my hypo 1, let me just move this back, open auction in range, a push down into this 84 to 86 level, possibly even down into the 81 to 80 level, but somewhere between the 85 and the 80 level, I'm looking for responsive buyers to step in, rotate us up, taking out the overnight VPOC and the naked VPOC from yesterday and the naked close, which will be at 28.90. Settlement was 28.89.75. So they're a tick within each other, chopping in this upper distribution and then breaking through the 93 and starting to push up and taking out the overnight high and the naked VPOC and the naked close. And our first retest of the 2900 again, and it's going to get really choppy in this area up here, and I'm expecting to come back and close just below the 2900 on hypo 1 down at the 96 to 98 area. That is hypo 1. Hypo 2 is a open auction in range. Value, remember, value on a trend day doesn't mean much because they did not agree on price. That is the definition of a trend. But I'm looking for responsive buying up into the upper distribution, chopping up here and either failing to break the 93 or a false breakout or a failed breakout, and then sellers step in, rotate us down, coming down to that zipper measured move. The zipper measured move remains valid until we get above 95.25, the overnight high, and pushing down into this 28.80 level, and basically chopping with a late day probe down into testing the range low from yesterday. Fail to break below that, and then rotating us back up and closing somewhere between 85 and 89 as a fairly tight day after a trend day. I'm looking for a balancing day in Hypo 2 with a little bit of a downward skew to do some repair work. Hypo 3 and Hypo 4 get flipped over today because of the bullish engulfing. So trend Hypo 3 becomes the trend up. Hypo 4 becomes the trend down. So Hypo 3 is an open auction in range. Failure to take out the 8150. Buyers stepping in early, rotating us up into the naked VPOC and the naked close, pushing up, testing the 93, and then breaking through and pushing up into. And my target on Hypo 3 is up at the daily upside ATR target up here in the 2906 to 2909 area, and coming up and closing up here as a continuation move from yesterday. That is Hypo 3. Hypo 4 is a repair day and an open auction in range. Failure to break through that weak high at 93. Sellers step in early, move us down into the 7650 area, chop in this area, and then push down and come down and push through this 65-month low and come down into this 58 area. Our daily downside ATR will get broken badly, so this liquidation break could get pretty ugly. But it's less probable than balancing or getting a continuation, in my opinion. So that's what I'm looking at on the ES. Quick look at gold. And of course, all my profiles. I lost internet last night for a couple hours after the market closed, and I've lost a lot of my, I didn't save everything. So we are in this balance zone right now, continues to be fighting this 1200 level. Right now, the key to the downside is this 1189.40, same as it was yesterday. And the key to the upside is going to be the 1211, 1212 area. But right now, we're fighting the 1200. It's very difficult to trade gold in this area because it's going to chop around $3 to $5 inside of this level, and the moves are pretty quick right now. So just we're compressing for another big move, and we don't know if that move is going to be up or down. But I'd be using the 1212 and the 1189 area as a guide to a breakout of a bigger magnitude and probably a $15 to $20 rotation in gold. It's coming. It's just we had this 50 move down. We've come back up, and we're balancing for either a continuation wave down or a regression back up into balance up here in the 1233 area. That's going to complete our pre-market session. As always, trade well, trade safe, and catch you on the flip side.